Hi, this is Dr. Jeffrey Scott, and this is my Market MRI Pro MetaStock launch video. I'm doing this from Dubai, um, November 18th, 2025. Sorry, I'm not in the States to do a live launch video with you all. My email address is marketmripro@gmail.com, and my Google group is called Top Down Trader. More about that in a few moments. I do a lot of videos, and these are always for educational purposes only. Anything I recommend should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. I'm honored to be launching my toolset in MetaStock. I've been teaching people how to trade, creating indicators and tools going back 30 years. And in fact, one of the first products that I used was MetaStock in the DOS days. That gives you a sense how many years ago. I mentioned my Google group. It's a way for me to interact with owners of my tools. It's a way for you to ask questions, to get help not just by me, but by other community members. I do at least a monthly free educational program reviewing how I use my various tools, and I'll rotate between MetaStock and some of the other platforms that my tools are in. And I'm always willing to help you with getting things set up and running. So please join, and I look forward to seeing you there. By the way, it's free. And I do some live education. I usually do 2 events a year. Still waiting to lock down the June event, which is typically a low-cost event that we do out in Orange County in memory of a great trader and friend, George Lee, who used to hold a program there annually. And then I do one in South Florida, always sometime in November, late October, early November. You'll find out about those if you are part of the Top Down Trader. Now, the one other slide I want to talk about was this one. And why is my group called Top Down Trader? And why am I going to talk about markets and sectors and not just show you my cool scanning? I totally am a believer in the top-down approach. If you just look at the markets that we're dealing with right now, you know that your portfolio is going up and down if you're not in cash based upon what the stock market is doing on a day-to-day basis. And it's that market that drives at least 50% of what happens in a day on your stocks. The sector industry group is probably good for their 20 to 30%. And that leaves at the max 20 to 30% that's tied to your individual stock. So stock picking is great, but it's really the market. So I had the luxury of participating in a group, gosh, in the 90s and early single digits in Southern California, where I got to a few times. I was in private practice as a cancer doc in Atlanta, Georgia. And we would pick stocks, and they would pick stocks every month. Somebody would keep tab on the stocks they picked, and then every so often they'd sit back and look at performance. Retrospectively, they would assign market type, strong market, mixed strong, mixed weak, or weak market, and then they would look at what the performance was at 1 month and 2 months using 20 and 40 days as a measurement period. And what they found is in a strong market, you can double your money in 20 days. In a weak market, you don't. Same people, same excellent stock pickers did not perform well in a weak market. The second thing they found is that if you hold things too long, they revert back to the mean. So take profits, and that's built into my trading plan that I teach and where I take profits along the way. And in a weak market, especially a bear market, which kind of feels like we're heading there, we'll see if that happens. Your first loss is your best loss because if the market doesn't turn around, it doesn't revert to the mean, it keeps getting worse. So that led me to become a top-down investor. I have traded everything from futures, ETF stocks, options, from tick charts to daily charts to weekly charts. And I found that the best way for me to make money is to look at the markets from a much more long-term perspective as a stock investor. And that's what I do every day of every week. And what all my videos that I've been posting for 30 years on YouTube are about, how to make money trading stocks. So this is interesting. I want to just review with you my set of indicators that I have, and then I want to go into looking at the markets from a daily and a weekly perspective and show you the timing model that I've included in my app and how I've used it, and then end with the sector analysis and then a little bit about my scans. The top indicator is really two bars. You see the top that's flip-flopping a lot, that's a daily indicator, and the bottom is a weekly indicator. A red says market's going down, green market's going up. That is my trending indicator, sometimes referred to as the bongo. And the bongo is something that I created with a number of colleagues on the urging of our mentor, Ian Woodward, to come up with a trading timing tool that he could use for trading stocks. So we came up with the bongo. Now, what's really cool about the bongo is not that it's effective, but it's how we use it to scan. So for example, when the weekly's green for a long time, and I want to find pullbacks in an uptrend, I just look for when the daily goes red. And I find the pullbacks. The daily goes red. I find the pullback. The daily goes red. I find the pullback. So I could actually build a scanner, or in the case of MetaStock, William can build a scanner that looks for stocks where the weekly is green and the daily has gone from red and back to green, giving me a potential signal to look at that pullback. So very important to me to understand the trend. There is no perfect trending indicator. Nothing works for trend when the market's in chop, and you have to always know what your market is in. The second one is a unique indicator called the high jump indicator. And what it does is it looks at how extended a stock is compared to the most extended stock going back 200 bars. So essentially, I'm looking at almost a year's worth of data and asking the question, if is the current position of the stock extended compared to the recent past? Now, why is that important? Well, so often you'll hear on CNBC and other media outlets that the stock is extended or the market is extended. And what does that even mean? Yeah, I could see over here looking at this stock that it's extended from, but is it extended too much? So this will oscillate between plus 100 and minus 100. At plus 100, it would tell you that the current bar is the most extended in the last year. Well, if it's the most extended in the last year, that's important information because it tells me the market probably turns back at this point. If, on the other hand, it's at minus 100, it's the most extended it's been in a year. What typically happens at that point is the market's going to bounce higher. And you could see at this low here, the high jump was reading minus 100. So I have found the high jump to be a very useful tool. Here was plus 100. Again, calling the top and the bottom. I use it to screen. I don't like buying things that are greater than 95%. I don't like shorting things that are less than minus 95%. And it just gives me a sense based upon that rubber band stretching of an individual stock or index, how stretched we are. In the candlestick section of the chart, I use three moving averages. I use a 17 simple in green, a 50 simple in red, and a 200, 50 simple in yellow, and a 200 simple in red. Why? Because I've always used those. I mean, it's a bad answer, but it's the answer I get because they've worked for me. Now, a well-known newspaper in trading, which has a live broadcast every day, and some really smart people talking about the markets, like to talk about the 21-day exponential moving average. Well, why don't you put one on your chart and tell me how similar it is to the 17-day simple? It almost overlaps. And because of that, I didn't feel the need to change. Everything that any indicator that you can buy or you can use has to be based upon price, volume, and time. That's it. So we all have crazy formulas. We've all things we really believe in. But at the end of the day, a good indicator may have the same signals as other indicators on the same day because they're all using the exact same data. I look at chart patterns, I look at extension, and then I have a set of indicators that are my dots. Now, why dots? Well, as you may have caught, I am a physician, board certified internal medicine and medical oncologist. And back when I was a younger physician, I had to work emergency rooms and I had to know how to read an EKG. So somebody would come in with chest pain. We would put 7, 8, whatever the number is, I can't remember, leads on the patient, create a electronic pattern, and then look at that electronic pattern and say, go home, or I better call the cardiologist, or you look okay now, but you've had a heart attack in the past. So we could diagnose both the current and the past on that patient by looking at that strip of electric waves. Well, I want the same thing for my stocks. So just to show you what we have here from the top, maize and blue, yellow and blue are what I call the CPR indicator. Now the CPR indicator goes long when it's blue, and that's a short-term type of a crossover system. It goes short when it's yellow. It's a very fast changing model and one that I use in futures when I was day trading in between companies that I sold with bad non-competes. I still use it as a signal to look at. Then you have a series of dots. Now, the main dot, or not the main dot, but the dot around number 7 is called a gap. And it's a specific type of a gap. It doesn't fire very often. I don't see one of these on the chart. So if we had a series of dots, the one where my arrowhead is would be the gap dot. And then we have the dot for a type of volume, which looks at how the volume is on the stock today compared to the last 10 or 20 days. We have a specific type of a breakout dot, which looks at a breakout from chop. We have a momentum dot. And so when you take those 4 dots, the gap, the volume, the breakout, and the momentum, a confluence of those signals often will indicate to me a good buying opportunity. And I'll take that confluence of symbols, system of signals. I will look at the chart pattern. Where does it fit compared to the automatic support or resistance lines, the moving averages? I'll also look at what my CPR is telling me, or excuse me, not the CPR, this one's the EMS. Wrong dot, but same thing, a moving average crossover system called the EMS. Now, the yellow is the traditional squeeze, which is the Bollinger Bands contracting within the Keltner channels. It's a stock building up energy. It's a spring. It's going to move at some point. It might move a lot, which is why people like the squeezes. And you could see the stock here was squeezing. This was sitting here. This isn't a great example, but it was going sideways. You could see the yellow dots came in. The green is when it comes out of the squeeze, back in a squeeze, and then the stock took off. Now, a squeeze is nice. It's not necessary. It adds to the story. Below the squeeze is just a wilder PSAR. Why do I have it? Because this is a trading system and methodology that are used by thousands of people around the world. So I know that there are people taking trades. Green will mean long, red, short. It's also a system that some people use for stop losses of getting out of a position when the color changes. So it doesn't influence whether I'm getting in or out, but it's sort of a filter I'll look at for validation. And then on the bottom are these isolated dots that are called green candle lows or red candle highs. And what these often represent, we'll look at this one up here. It wasn't the high, but when this candle opened up, it was higher than any prior close by 20 bars. It then closed lower than it opened on the day. It was still a positive candle, but when you look, it was red. And if you look down here, you can see the red candle. Why? Because often this is a top in the market. Down here, you see a green dot, which means the stock opened lower than the past 20 days, closed higher, giving a green candle, and that's a single candle reversal. So this just gives me a picture so I could look at any place in time. Right here, I can say, oh, it's got a new EMS signal. That's great. It's got good volume, a breakout, and a momentum. We'll talk about double momentum at some point, a squeeze. So that's all the ingredients of a stock that's going to move. Its PSAR is green, so that supports me going long. I don't expect to see a red candle high or green candle low on this stock. And then what do we have down here? Secret weapons. There are lots of things that have to do with relative strength. That same magazine that I mentioned looks at relative strength against every other stock in the marketplace. And you might want to buy high relative strength stocks. That's great. That's a static number. It doesn't change very much. And it tells me what it's done in the past. Nothing wrong with that. There are things, other RSIs that look at an individual stock and how, like the Wilder RSI, and how does that change over time? How does this compare to the past? But I want to know right now, today, how does the stock compare to the stock market? And is my stock outperforming the stock market or underperforming? So I created a ratio chart of looking at the relative strength of the instrument versus the spider, and then a proprietary moving average. And we know, and we have found that nice moves in the market, whether they're up or in this case down, often occur when the daily relative strength versus the spider crosses below the moving average and the weekly crosses below the moving average. And then lastly, I like volume, but the volume that I like besides the third up dot here is I like unbalanced volume, and I look at things like trend line breaks and where is it in regards to its moving averages. So you could see with this big sell-off at the arrowhead, we had the negative relative strength spider versus moving average daily. We got it on the weekly, and we had it on the unbalanced volume. That's my list of signals. Now I will combine them and use them different ways from a market timing perspective and for a scanning perspective. Excuse me. If we look at it from a market timing perspective, and let me kill Discord because it's going to drive you, me, and my wife crazy. This here is my weekly timing model. If you make a timing model, you want a timing model that keeps you in the market for long periods of time when the market's going up, gets you out in time to avoid the most pain, and then gets you back in before the market's gone up too much from there. And we've been living in, up until the last couple of weeks, market nirvana. We have been in a huge uptrend now for quite some time. It's not always this easy. And so I developed a timing model that combines that weekly bongo with a 30 period weighted moving average. And the first bar where the price closes above the weighted moving average and the weekly bongo turns green, I will get a buy signal. And that buy signal will stay intact until the first bar where the opposite occurs, where the price closes below the WMA and the setting of a red weekly bongo. The fact that requires both of those avoids being whipsawed. Now, the beauty of this model is it would have got you in the market here on the week of November 10th of 2023, and it would have kept you in this really awesome bull market up until this bar here, which was January 10th, 2025. So it met my requirements of keeping me in a long time. Now, the second part is I want to miss all of this stuff. And it got me out in plenty of time and then got me back in to resume the uptrend. Now, this is a weekly timing model. It's going to be slow. So to me, this is the dominant trend of the market. And so I don't like being a counter trend trader. So I know the dominant trend right now here is long. It's weakening. You could see the bongo on the spider, the bongo on the so up here, the Qs and the bongo of the Russell have gone red. And you could see we got a yellow candle here, or yellow line there in the Russell, which says the week's not over yet, so I'm not going to paint it red, but it looks like we might be switching to a sell signal. That worries me. Now, on my videos that I do weekly on YouTube, I talked about the bad market we're in, a number of other breadth indicators that I hope to bring to the MetaStock add-on as well. And I talked about raising cash. So right now I'm almost all in cash. And those that follow me have had the same opportunity to be in cash as well. Some are not. Um, the daily model is what had got me into cash. And the daily model, let me pull the daily up. Is this it here? It is. But I got the weekly still. Oh, it's going to come up here. Here we go. Here is a daily model. So let me just play around with it. Let me just give me a second to make it useful. Let me just set it out here. Perfect. So the daily model has the same timing signals, but the daily model is going to go back and forth a lot more. So when the daily model's all in a buy and the weekly's in a buy, I'm all in and I'm trading the market. But when the weekly starts to waver, or I lose the bullish signals on the daily, I start to raise cash. And again, there are a number of other breadth indicators that I use on my day-to-day that part of my education. I'll introduce you to them. Most of them are standard indicators. What we can see on the daily is that not only have we lost the bongo on the same four, Spider, Qs, Russell, and the diamonds, but we are in a sell signal. So what that tells me is we are in a uptrend on the dominant trend with a pullback, and no one knows if a pullback will be modest or the pullback will be so severe that it flips us into a downtrending market. So when I start to see those red bars come in, and when I talk about other breadth indicators, one's called the Hindenburg Omen. I have some exuberance to the upside and downside indicators. Stocks above various moving averages, 13-week new high, new lows. There are a number of other indicators that I use to help me, and they started showing me a couple of weeks ago that this market was likely going to fall. And I think that's what we're seeing right now. Now, how far it falls, we'll talk about that on one of our live sessions. But I see the daily is weak. You notice that you got an arrow down on the price bar, and this will reflect the bars that are going to, I believe, create the signal with the bongo red above. So daily and weekly timing model, the daily model says to be very careful right now. Now, let's say you're a perma bull and you've got to be long something. Where do you want to be long? So I'm very simple. This in the upper left is Bitcoin. Excuse me, in the lower right was Bitcoin. I had to remember where I put it. And you could see Bitcoin as rounded top is basically dying here. But notice you got the same timing models. The rest of them are the S&P 500 sectors. And this is live data today, I believe. Let's see. It is. And you could see we only have two sectors in the entire market that are positive right now. And one of them is energy, and one of them is healthcare. And specifically within healthcare, the big winner is biotech. Now, when I look around, I see a lot of green candles. And whether or not those amount to green shoots and may seem to show me that the market's going to rotate, I don't know. But right now, I see very little that looks great to the long side. Now, this is a daily model. One could take the same charts and move it to an hourly model. And let's see what happens with the bongo. I haven't done this yet, but I have in other platforms been able to go intraday. It may not calculate intraday because of the bongo, but it gives me a sense of what's working in the market right now and where I might want to chase if I was going to put some money in. So that's the top down, the weekly, the daily, the sectors, and we'll spend a lot of time talking about this during my live educational programs. Now, the way that I've set up my MetaStock, and I am a MetaStock lifer, and I've bought a lot of packages, a whole lot of packages, as you might see as I'm scanning through here, which is why it's such a kick, a positive kick to know that I'm in this as well now. I have a number of explorations. Let's talk about them. A watch list filter allows you to set your price and volume limits. I've already created a offline data set that I like to use. It's a little faster than online. And then I can filter for short-term uptrends and downtrends, looking for breaks and bounces. So this is a downtrend, and this is a bounce, a bounce, a bounce. Each of these could have been selling opportunities. I'm only want to see a breakout someday, which would be a buying opportunity. I have retracements and downtrends and pullbacks and uptrends, looking for a specific pattern of a stock. This would be a pullback and an uptrend. I'd be looking for a signal to go long. And this would also, down here might be the pullback in this uptrend. And now we're in a downtrend. I might be looking for the retracements to short. So I'll look at a pattern combined with my dots. I have long-term uptrend bounces and breaks, and then I've got momentum indicators. So if I was to run a very quick scan and look at short-term downtrend bounce and breaks, because most things are in downtrends, and let's run it online. And we're going to run it against, let's just run it against healthcare because that's where it looked the most interesting. And we'll add energy too because energy was the other one. So we're going to run it against those stocks. It's going to run today. And I think that's got it. Let's hit start exploration. Now I'm going to pause. Actually, while it's running, let's just pull up Explorer. Let's look at some recent reports I ran. Oh, it's not going to show them to me. Okay. I thought I had some reports. It might be on a different computer. All right, back to pausing. We may be a few minutes as we're running against live data. We've already found 3 stocks that meet the criteria. All right, the scan has run, and as I was sitting here, I couldn't help myself but go look at the market. It looks like we're getting somewhat of an intraday reversal. I think people are just getting things set up, waiting for tomorrow for NVIDIA earnings after close to see if that's going to save the AI complex, which we'll see. So what we're scanning here are for stocks that are in a short-term downtrend. So the program will automatically generate trend lines. So that means similar to what we saw here. This is in both a long-term and a short-term downtrend. And what we're looking for are those periods of times or around the times that there is a bounce or a breakout from that. Now, what we have here is a couple of different columns. Let me just review them. A 1 bounce. I'll just bring up Align Technology while we're talking. A 1 bounce tells me that the stock pulled into it and broke down, but we'll look and see. A breakout, of which do we have any breakouts in a day like today? Okay, let me let that thing build. There we go. I'm not on the most powerful computer, nor am I on the best internet connection in the world, so let's just let this load. All right, we can go away now, Mr. Widget. Not that widget. Okay, let me pause. As you can see in the Zenith quotes, the Russell is actually up 0.74%, and the NYSE is up 0.15%. So that sounds like the broader markets are actually improving today. We'll see where we end up. That's what matters. All right, so let's pull back up my reports, hopefully. And then let's pull up the report. Excellent. View all reports. And see, I had some other reports there, which is the one we just did. Short-term trade. Here it is. Perfect. We want to look at Align Technology. So let's bring that chart up. Oh, you can clearly see what a downtrend is. This stock has been in a, let's bring it up here, long-term downtrend. And we're probably talking about this short-term downtrend here. So these things will stick around for a few days after they fail, because sometimes I want to come back and look, and you could see that this thing ran up to the short-term downtrend and failed. all right? Let's and bounce back. Let's see ALKS. So if you believe the market was going to go lower, there's nothing wrong with that belief, and you wanted to look for opportunities to take shorts or buy puts, um, it would be stocks in this category that are in a short-term downtrend that pull up into support and break down. Again, I mentioned before, I am not in a great internet environment, and sure, so pop up in a second. So this one, very different. The stock has not been in a long-term downtrend. It's actually, well, it used to be a lot higher, but at least on this work, it's still flat, trading higher, ran into resistance, pulled back, ran into resistance, pulled back, and ran into resistance again right here on the 50 and pulled back. So this is one that looks interesting if I was that person who wanted to short the markets after this big of a sell-off. And I'm not saying I'm that person. Why do I think this is an interesting candidate? Well, you got a bit of a bearish engulfing pattern forming today. Failed to get above the yellow, which is the 50. You've got 3 breakdown bars in a row. You're coming out of a squeeze, so you know you're going to have energy to make a big move. And most importantly, your relative strength versus the daily versus the weekly and your volume are all negative. So this could be something. Now, it's a cheap stock, so it's probably not one I'm going to be rushing off to short. And I'm looking for a bounce, even if a tradable bounce to come in soon. So I'm not sure I'm going to be jumping looking for shorts. So I would typically go through the list of stocks. Things are so slow, I'm not going to do that right now. But I just want to show you on some of the other scans, for example, the pullbacks and uptrend scan. It looks at the score of the dots. Now it's going to change to numbers, but it shows me how many dots I had. Is my on-balance volume above or below the moving average? Is my relative strength above or below the moving average? So it gives me a picture of what the stock looks like. And these are pullbacks and uptrends and retracements and downtrends. So there's a number of different scans that I can run to help find the stocks that I like. So I'm just going to finish in 1 minute here and hope that the audio came out better than this morning. So here is the bounce from a downtrend. And now it's actually going to show up potentially as a bounce from an uptrend. So this is in a bit of a wedge, and it's probably going to break out one way or the other. It's typically a continuation, and it might be a negative thing for the market. Maybe it's going to pull down and retest here. So I just wanted to give you a taste. Obviously, I'm doing this real time. I'm not going to be able to generate what are the best looking stocks in the world because we're in a midst of a big pullback in the markets. But I think I've got a tool here that can help you with understanding the market, where's the leading industry or sectors, how to scan for stocks that meet certain parameters. And over the next months to years, I hope you can follow me and let me show you how I can use tools like this to help you improve your performance. No performance guarantees can be made. Just because I've done well doesn't mean anybody else can do well. But I love teaching and training, and I've got a following because people, I think, like to learn. Thank you. Thanks for purchasing my add-on or considering the purchase.